Welcome back, crypto explorers. Are we witnessing the dawn of a regulatory renaissance for crypto in the United States? Or is this just another fleeting phase? Let's dive deep and unpack everything you need to know. Bitcoin has now been repackaged into investor-friendly ETFs, making it more accessible to mainstream finance than ever before, and it's currently trading at historic all-time highs. The broader cryptocurrency market has surged past a $2 trillion valuation, signaling massive renewed interest and capital inflow. Despite years of bearish predictions and countless headlines announcing crypto's imminent collapse, both skeptics and supporters alike now agree on one thing: the crypto industry is not only surviving but thriving. But here's the real kicker. If crypto is clearly here to stay, why is it still governed by a dusty 1946 legal test about orange groves? Let's rewind a bit. Back in 2024, the United States Securities and Exchange Commission had strong momentum in the courts. They were winning case after case against some of the largest and most recognizable crypto companies in the space. The climate for regulation was murky at best, and companies operating in this environment faced enormous legal and financial risk due to the lack of regulatory clarity. Now, fast forward to spring 2025, and it's a dramatically different landscape. The environment has shifted. The SEC has dropped nearly all pending lawsuits against top crypto players, signaling a potential turning point. The regulatory tone has softened, and there's new energy within the agency that appears to favor constructive engagement over strict punishment. This major change coincides with the appointment of Paul Atkins as chairman of the SEC on April 10th. Atkins has long been seen as a market-oriented figure and is expected to bring a more nuanced, supportive approach to overseeing the digital asset ecosystem. His leadership could mark the beginning of a more collaborative era between regulators and innovators in the blockchain space. What do you think? Can new leadership finally bring regulatory clarity to the crypto world? Drop your thoughts in the comments below. Soon after President Trump's return to office, the SEC launched a brand new initiative, the Crypto Task Force. This team is led by Commissioner Hester Peirce, who's affectionately known in the crypto community as Crypto Mom for her long-standing support of blockchain innovation. The task force is a blend of seasoned SEC veterans and policy experts from Capitol Hill. Their job? To rethink crypto regulation from the ground up. Their activities over the past few months include gathering written public input, holding meetings with industry leaders and subject matter experts, and organizing roundtables that bring together all sides of the debate. The SEC has labeled this initiative the Spring Sprint toward Crypto Clarity. Let's take a look at one of their biggest early focuses: the SEC's interpretation of the Howey test. Historically, under the leadership of Gary Gensler, the SEC relied heavily on this decades-old court decision to determine whether a digital asset qualified as a security. The Howey test asks whether there is an investment of money in a common enterprise with a reasonable expectation of profits derived from the efforts of others. Based on that framework, the SEC argued that many digital tokens, including major ones, fit the definition of a security. And in 2024, federal courts actually agreed in several high-profile cases. But the new SEC administration is taking a fresh approach. It has not only walked back most of the Howey-based lawsuits, but has also opened discussions about which kinds of crypto assets should actually fall under securities laws at all. In February 2025, the SEC's Division of Corporation Finance issued an important statement. It concluded that meme coins do not meet the legal definition of a security. While this staff-level guidance doesn't carry the full weight of formal regulation or law, it provides a strong signal of the agency's current thinking. The SEC defined meme coins as digital assets that emerge from internet memes, viral trends, or pop culture. These tokens are typically driven by speculation, community hype, and cultural references rather than utility or a functioning product. Importantly, they are often bought for entertainment or social reasons, not investment returns. According to the SEC, meme coins don't meet the Howey criteria because there's no pooling of investor funds for a common project, and there's no reasonable expectation of profit from the efforts of a third party. Rather, value increases come from collective market enthusiasm. Do you hold any meme coins in your portfolio? Should they be regulated differently than utility or governance tokens? Tell us your view in the comments. That wasn't the only signal from the task force. In March 2025, the SEC hosted a roundtable titled How We Got Here and How We Get Out Defining Security Status. Experts from across the crypto, legal, and financial worlds discussed the regulatory gray zones that still remain even in the wake of those lawsuits being dropped. The takeaway? Without action from Congress, the uncertainty won't go away. The crypto industry continues to call for clear, forward-looking legislation, but in a highly divided political environment, it remains unclear if real reform is on the horizon. The SEC didn't stop there. On April 11th, the task force hosted a second major roundtable titled Between a Block and a Hard Place, Tailoring Regulation for Crypto Trading. This event tackled one of the thorniest issues: how crypto exchanges like Coinbase should be regulated. Previously, the SEC had sued Coinbase, arguing it operated as an unregistered securities exchange, broker, and clearing agency. Coinbase and others countered that they wanted to follow the rules, there just weren't any clear ones to follow. At the roundtable, then-acting Chair Mark Uyeda floated a potential middle ground solution: a temporary conditional exemptive relief framework. This approach would allow exchanges to function under tailored temporary guidelines, while Congress works on a permanent legal structure. Would a flexible framework help or hinder innovation in the crypto space? Hit the like button if you think regulation should adapt to technology, not the other way around. The crypto world in the United States is undergoing a major shift from enforcement-first to engagement-focused. With new leadership at the SEC, dismissed lawsuits, and serious efforts to modernize the regulatory framework, 2025 could become a foundational year for the future of digital assets in America. Don't forget to subscribe for more crypto clarity, market analysis, and weekly insights that go beyond the headlines.